Welcome, ladies and gentlemen. Right, so my name is Jamal. I will be your host for this basic training here. So, my goal is to make this as simple and easily digestible for you to be able to learn the basics of credit repair. This way, you'll be able to know how to look at profiles, how to be able to see what negative items are, what are positive, what is affecting your credit, and most importantly, how to be able to repair your credit, right? So we'll get into all of the details step by step, right? Again, this is going to be the goal of this is to make it as simple as possible for you all to be able to grasp this. And this is a basic training, right? There's going to be another level of the master course, right? And you guys will have the option if you want to be able to take it to that next level of disputing, where we're getting into like the heavier things, such as like the the big dogs of like bankruptcy removals, right? And we'll break those down, like even like student loans and all of those other things. But for now, let's just get into the basic disputing, right? The basic overview of credit repair, right? So, what are some things that we're going to cover? We're going to cover here just the history of credit, right, in lesson one. Also, please forgive me if you see any typos. I've always had an issue with that. Some things I still need to work on. I'm only human. But we're also going to learn about the elements of a credit report, right? And how to repair your credit, which is most important. So let's begin in lesson one. First, let's talk about what is credit, right? So let's just make this simple. Like, credit, it's a record keeping of your financial. So this includes your personal information and your business information too as well. It's essentially the confidence a purchaser has to have the ability to pay back something, right? And this is created from the bills that you pay, right? From the work that you have done. If you've been either sued and so forth, like they have all of that information on there. Now, your score for credit is a 3-digit number that reflects what risk you are, right? Like if you're looking to buy a home, if you're looking to buy a car, right? Or you're looking to get personal loans or business loans, right? Let's dive in a little deeper. I want to be able to give you some fun statistics, because the reason why most people are here is because maybe their credit isn't the best. Maybe you want to be able to repair other people's credit, or you want to start your own company, right? But I want you to know that there's a lot of people with bad credit, right? So, and the reason why is because here's the thing. 61 million of Americans, they have bad credit, right? 33 million of Americans, they actually have no credit score. And 24 million Americans have no credit file. And what's so interesting about this, right, is for the people that do have a credit file or credit report, 79% of all credit reports have an error. Yeah, it's true, right? And that's a huge percentage, right? So that's what allows us to be able to come in and to make those improvements. So where are those errors located? Who are these companies that's reporting it, right? Let's talk about the big three, right? And you probably have heard of some of them, but the big three, they are TransUnion, Equifax, and Experian. There's others, but these are the main big three, right? Now, they may look differently on different platforms, right? Equifax has their own website, Experian has their own website, TransUnion do too. You guys may be used to like Credit Karma, right? But essentially, they all report the same way, right? And what I mean by that is that they're all going to show your personal information, like your name, your address, your place of work, right? It also shows your positive accounts, also shows your negative accounts. your public records, inquiries, like when you go apply for something, right? They see that inquiry, right? The consumer statement, and also the furnisher contact information. Who's the furnisher? The furnisher is the company, the creditor. It's also known as the furnisher, right? Now, here's some actual pretty cool facts. TransUnion is actually the third largest out of all three. Equifax is the oldest, right? They're the OG, and they've been around since 1899. And the largest of them all is Experian, right? Now, you may ask yourself, well, what are negative items and why are they holding you back? So let's break down what those negative items are. So negative items can be things like high balances. That's also known as utilization, right? So you want to make sure and keep your balances below 30%. If you've never heard about that, let's just imagine if you have a $100 card, just for simple math. Think of it as you only can use 30% of that, right? And you want to stay below that 30% range, right? Because once you go over, then you're going outside of that utilization range, and that can harm your credit. So we want to stay below 30%, right? Late payments. Late payments themselves they actually take up 35%. They make up 35% of your credit profile. So if you have ever made a late payment and they report it, you may see like a drastic decrease in your credit score, right? And another one is charge-offs. What are charge-offs? People may ask. So charge-offs are what happens like after some times, like let's say from 30 to 120 days. In the creditor's eye, it's more likely that you're not going to pay them back, right? So what they do as a business is that they write it off so they don't have to pay taxes on it because they're not receiving a profit from that, right? So after that, then they decide to, hey, you know what, they're going to sell it to someone, mainly the collection company, to collect on that. And that's what a charge-off is. Now, you also have things like repossessions, right? If you don't make your car payments, they come and they take that, right? And you also have bankruptcies. Let's move into some more of the positive side of things, like what can make your account positive, right? So positive items are low balances, of course, right? So anything below 30%, if you can get under 15, 10%, that's fantastic, right? And how do you keep your balances low? You want to be aware of things like your statement date, right? Most people aren't aware that it's better to make payments on your statement dates and have that reported like a zero balance instead of waiting on your due date, right? Your statement date is the actual date that creditor reports your balances to the credit agencies, right? So you want to be able to pay it down if possible, completely off by the statement date. This way, once it reports a fantastic amount, or if you can have it down by like 10%, right? On-time payments is fantastic too. You do not want to have late payments. You want to show that you're making consistent payments here. Aged accounts helps. It shows how long you've been managing this certain dollar amount, right? So the older, the better, right? And you want to make sure that there's accurate information. And most importantly, you want to have mixed accounts, right? So mixed accounts are a variation of different loans, right? Different credit cards, mortgages, right? There's an old saying, right? That the banks lend to people that don't look like they need the money. And the more that you get into this space of the finance, you'll realize that it's absolutely true. It's one thing that is not just like an imaginary thing. So let's get into the grand scheme of how credit is calculated, right? Now, a huge part of credit comes down to the amount that's owed, also the utilization. Again, this takes up 30% of your actual credit score. Another huge part is your payment history, right? So your payment history is if you were late 30 days or 60 days or 120 days, right? That can take up 35%. So you do not want to be late on your payments. Things like types of credit, new credit, and credit history take up a smaller amount, as credit history is 15%, new credit is 10%, and types of credit is 10%. How do you optimize your credit, right? After you know that, here's some things that you want to know to optimize your entire profile so that you're set to get the best financial or funding position that you want, whether it be a car, a house, and so forth, right? You want to have one installment loan, right? An installment loan is literally what it is. It's a loan. You can have different types of loans too, right? Some good examples are you can do like pledge loans, right? 3 revolving trade lines. So think of 3 revolving trade lines as 3 revolving credit cards. You want to have at least have 3 credit cards, right? You want to increase the limits. So every 90 days on a personal end, you want to ask for an increase on your personal credit, right? Age accounts, those are fantastic. Keep all of your credit accounts open so you can have that age going on as long as possible. Even if you just make one payment, like one transaction per month, and just make the payments, or you're paying the annual payments, it's great to just keep that going on there, right? And you want to have minimal inquiries. Try to have your inquiries below 3, right? You don't want to show that you're just trying to ask for money here and there, here and there, here and there, because that's what the inquiries actually show. You want to remove all of your negative items. Of course, have your personal information correct, right? You want to build your credit, so pay down your high balances. Add positive items on there, meaning different types of accounts, right? Use your credit cards, and again, make sure and keep it low, or make the balance 0 balance. This is going to look fantastic for your report. And again, do not close age accounts, and more importantly, try not to apply for credit, right? You want to not have so much, in the sense that you don't want to apply for credit every 30 days, every 60 days, right? Give yourself some gaps between. And that's sort of like some of the most important parts of like optimizing it. But another fantastic thing that you can be, if you aren't aware of it, it's known as piggybacking. It's the fastest way to be able to grow your credit, right? And this is to either get yourself be an authorized user on someone's account, or you can do a joint account holder. Now, what is an authorized user? So let's say if you were to go and ask your parents or your grandparents to be able to be an authorized user on their account, what you essentially do is get the history backdated onto your credit report, right? And this is going to give you the age. And you want to make sure you ask someone that actually has a good credit history, right? Because just as much as if it's a bad credit history is going to affect you. So you want to make sure that they're also making their payments on time. But authorized users are a fantastic strategy for when it comes to getting that age up, right? And if that person has a high limit on a credit card, it can also bring your utilization down, right? So that's it for lesson 1, right? We want to keep this as simple as possible. We want to make this as digestible. So lesson 2, we're going to get into some other deeper things too. All right, I'll see you in the next episode.